Welcome, ladies and gentlemen. Welcome. John Bush here with Live Free Academy, and we are going through our series counting down the days until the Bitcoin halving takes place, the big halving of Bitcoin. That means there's going to be half as many new Bitcoin minted and rewarded to miners with every block that gets added to the blockchain approximately every 10 minutes. Let's check in with our trusty Bitcoin halving countdown clock, courtesy of Watcher.guru. As we can see, the slated date for the halving is April 19th, 2024. Around 9 o'clock. That's in 1 day and 7 hours. Now, it's actually gained several hours because I saw on Twitter, on X, there were miners that were like, I'm turning off my machines, trying to force it to be on 4/20, April 20th. But we'll see if that ends up coming to pass. So today, in today's countdown video, I want to break down some concerns that I have and let you guys know that it is my strong belief that because Bitcoin is such a superior asset class to just about every asset, I do believe that it's possible Bitcoin could become a reserve currency for banks, an asset that banks keep on their balance sheets, maybe even central banks. Now, this has broad implications for Bitcoin holders in the crypto community and people that care about freedom. Let's go ahead and break it all down. I do want to share also, coming up on April 23rd through the 25th, we are going to open membership registration for the new and improved Live Free Academy Accelerator membership. We're going to have a very strong focus on cryptocurrency, and it's going to give me the opportunity to stay in touch with my clients so I can serve them at the highest level, as opposed to them doing a one-off workshop, one and done, and then the cryptocurrency space changes dramatically in the next 3 months, 6 months, especially in the next year or so, let alone 2 or 3 years. I think I can serve my audience better if we're staying in contact, if I'm continuing to teach them, if we're engaging and interacting regularly. We'll have monthly master classes, a monthly John's Crypto office hours. There'll be some courses you have access to. In addition, you'll have access to a really strong community of other freedom lovers that are going through a lot of the same material. We're going to be sharing more about that. If you want to go ahead and join the waiting list, you can do so at livefreemembership.com, livefreemembership.com, or join our daily email newsletter, livefree.academy/email. But again, we're going to be opening up that membership just for those 3 days, the 23rd, 24th, and 25th. We'll be telling you more about it as the weekend and as the end of this week progresses. But definitely join our email list, because that's where we'll be sharing more about it. And I think it's going to really blow people away as far as the impact it has. Okay, let's get right down to it. Bitcoin as a reserve currency. Whoa. I've been involved in the space for quite some time, over 10 years, and originally when I learned about Bitcoin, me and my Freedom Crew, our voluntarist community, we were like, wow, Bitcoin is going to completely disrupt and overtake and overthrow the central banks. Bitcoin's going to kill the Fed and the Fed and the Fed. We were chanting that like it was going out of style back in the day, in the Ron Paul days, but I think that was a naive view. Since then, central bank digital currencies have been announced and implemented in many places across the globe. Since then, there's been a bit of chicanery with Bitcoin. Bitcoin was neutered as a peer-to-peer electronic cash, its original intention, which I believe to be far more revolutionary than Bitcoin as a digital gold store of value. And, it's unfortunate, but what are you going to do? Well, what we're going to do is understand our enemy, understand where we stand in the cryptocurrency space, and leverage tools and assets that we have at our disposal for unique purposes. And that's kind of what I want to set the stage with that here today. So Bitcoin as a digital reserve, Bitcoin as a reserve currency. When I often get asked, like, what's up with Bitcoin? BlackRock's involved. This is a bad thing. We're worried. We're concerned. When I first learned about BlackRock and the ETFs going to be approved, now, mind you, they've been working on ETFs for many, many years. They just haven't been approved. My first instinct was like, first of all, I want to congratulate anybody that front ran BlackRock with Bitcoin and front ran Wall Street and large financial institutions. Front running is a term where you invest in something ahead of the curve, ahead of the trend. For example, if you invested in Amazon with Jeff Bezos way early on, or you saw Apple and Steve Jobs early on, you're like, wow, this is going to be something big, and you get involved before all the hedge funds and everybody gets involved. That's front running. So kudos to you if you front ran Bitcoin. You will be rewarded handsomely if you hold on for dear life, right? Even that term, hold on for dear life, like originally it was supposed to be a currency. So the reason why I think it's possible that it could be a reserve currency, in large part, this view was informed by a book by Saifedean Ammous called The Bitcoin Standard. Now, there's a lot of things in that book that I am not fond of. Things are changing rapidly in this Bitcoin space. But that book really lays out the case of Bitcoin being, instead of the gold standard, it's the Bitcoin standard. Now, of course, this will have many positive implications, way better than fiat currencies rapidly inflating their currency, but it does have a lot of implications for us, the Bitcoin users. So some people may be saying Bitcoin is a reserve currency. That's absolutely ridiculous. Well, in addition to thinking, having a state of gratitude when I saw that we were front-running BlackRock, I also realized this is just an indication that the market and large financial institutions which move markets now believe, as I do, that Bitcoin is a superior asset class to just about every single other thing out there in the market. It is the best asset class in my view. One of the reasons why it's the best asset class is because it is the hardest asset on the planet. What do I mean when I say hardest? I mean something that is next to impossible to inflate, to manipulate, to create new ones. It is just set in stone, right? And of course, Bitcoin is hard-coded to only ever have 21 million units. To be perfectly honest with you, I try to be in integrity with my word. It is possible if all the developers and the miners and the community got together and were like, we think we need to increase the block size or increase the number. I wish that's what they said. They did say that, but kind of got shut down. We need to increase the number of Bitcoin that we're going to create so we can continue paying miners or whatever it may be. That could happen. The code can be changed, right? I do think that there's incentives in place to deter that. So I feel confident that Bitcoin will only ever have 21 million units. But I'm just trying to be honest in how I communicate things. Because if the developers, if investors, if the miners got together and were like, yeah, let's do that, it's really developers and miners that make the decisions. They essentially would be like shooting themselves in the foot and weakening and devaluing Bitcoin to inflate the currency. But regardless, right now, and I believe this will be the case in the future, Bitcoin is hard capped at 21 million. There is no other asset that is that hard. In fact, gold, which is a great asset as well, it doesn't have to be gold or Bitcoin. You can hold both. You'll probably win better as far as making gains if you hold Bitcoin, although gold is looking pretty hot right now too. Gold has an inflation rate, meaning gold is mined and new gold is discovered and brought into circulation of about 1.5% to 2% every year. Bitcoin right now, I believe, is about 1.8 or so, and when the 1.78 right now, every year there's 1.78 new Bitcoin in circulation, and the next inflation rate after the halving that takes place just here in a day or so is going to be 0.89. So now all of a sudden the inflation rate of Bitcoin is less than the inflation rate of gold, okay? People that recognize the value of Bitcoin and that hard cap saw that. It's only inevitable that large financial institutions will catch up as well, okay? Now, this has a lot of implications because one thing I just want to note, I am also concerned about BlackRock because they're manipulative. They have diversity, equity, inclusion. They're also pushing all these environmental controls, and there's been hits on proof of work mining, which takes a lot of electricity, which isn't even necessarily bad for the environment. So there are some concerns there as far as co-opting manipulation. But as all of this has been happening, massive demand, massive institutional demand for Bitcoin along the way, and before this, in 2014 to 2017, Bitcoin essentially was neutered as a peer-to-peer electronic money, which was its original purpose. The block size of each block on the blockchain was not allowed to scale, and this created an environment that supposedly necessitated these side chains and Lightning Network. And let's take our Bitcoin, put it in the Lightning Network, get these Lightning Network tokens, essentially trade those very cheaply, very quickly, more privately than with Bitcoin, and then settle it on the blockchain, all right? This has a lot of implications. For one, with an artificially capped block size, and I'm going to get to my point about being concerned that in the future we won't be able to spend Bitcoin potentially if we bought a bunch of small amounts of Bitcoin. All right, this is where I'm explaining this. That's the practical implication for you, the Bitcoin user, especially if you've been dollar cost averaging, buying a small amount. There's some strategies you need to employ to make sure you don't end up with unspendable Bitcoin or unspent transaction outputs. I'm going to explain this briefly, try to make it as simple as possible, and we're going to be diving deeper in the membership for sure. I'll be holding your hand to make sure you guys get all this down. But at the same time, there's massive demand. Just before then, the size of each Bitcoin block, which contains the data of all the transactions, which you need to have your transaction included in a block in order for it to be confirmed and considered valid, size has decreased. The size didn't decrease, the size just never increased. And the transaction fee has increased substantially. For example, I went to church the other day and was really excited to see that they were accepting cryptocurrency as their donation, as the tithing. So I said, well, let's go ahead and send some Bitcoin. I already knew that there might be a fee issue. So I go to send $10 worth of Bitcoin. The fee was $4. Not going to work. I sent Bitcoin Cash instead and ended up paying less than a penny of a fee. So here's the challenge that we're facing. The way that a fee is calculated is the data size of the transaction times however many Satoshis you want to spend on the transaction fee. Remember, Satoshi is 0.000000001 Bitcoin. It's the smallest unit of Bitcoin. All right. I'm going to try to explain this the easiest way possible. That's how the transaction fee is determined. It's not 5% of the dollar amount or 5% of the Bitcoin amount, okay? Most wallets allow you to set a custom transaction fee, okay? Now, here's the challenge. A transaction, so remember, it's the data size times the Satoshis. The number of bytes, that's a data measurement, times the number of Satoshis you want to bid. And it's a bidding system, it's a fee market, so you're bidding against other people that want their transaction to be in the next block. A transaction has a bigger data size if there's more data included with the transaction, and that data comes in the form of the unspent transaction outputs. Okay, so let me explain it before I show it to you on a block explorer. If let's say I have a goal of sending someone one whole Bitcoin, okay? If somebody sends me one Bitcoin, I now have one Bitcoin in my wallet. I have one unspent transaction output. When someone sends us cryptocurrency, or when we send cryptocurrency to ourselves in our wallet, it sits in our wallet as what's known as an unspent transaction output. When we go to send a transaction to another party, our wallet compiles unspent transaction outputs into an input, and it sends it to the next person, their wallet, and they receive it as unspent transaction outputs, okay? Now, this is important because if the block transaction fee, if the transaction fee gets high and gets excessive, which I suspect it will, especially because there's a bunch of big players involved and a bunch of banks may hold it on their balance sheet, and the narrative is shifted to have small blocks, so we don't rarely do on-chain transactions. Even Saifedean Ammous in his book says the on-chain blockchain transactions will be reserved for banks and large financial institutions, and we'll trade tokens amongst ourselves. Whew, that's not revolutionary at all. If they're all using the blockchain, there's a high demand to use the blockchain as a settlement layer for banks. It's going to have a high transaction fee. If you have a wallet that has a bunch of unspent transaction outputs in it, especially if they're small, what we consider dust, and then you go to compile a transaction, it's going to be a big data set, and it's going to cost a lot. For example, let's take a look at this. This is mempool.space. We're doing a block explorer. This person spent $913. He had 1,477,270 Satoshis. As you can see, he spent 123 Satoshis per byte, which is when transaction fees are a bit high. They've been much, much higher. This right here is a great illustration of what I was talking about. You see, all of these right here were unspent transaction outputs that were compiled to send the transaction. So this person, we can see them all here. This person was sending a very small amount, 59,000 Satoshis, 60,000 Satoshis, 62,000 Satoshis. So presumably, let's pull up our calculator. So 0.00068,924 times the current price, which is like 63,000. So they were buying like $50 worth of Bitcoin over and over and over and over and over. And then they went to go send just 0.09 Bitcoin. It's not even a lot of Bitcoin. They went to send a tenth of a Bitcoin, and it cost them $900. Now, this person may not have known what they were doing. Maybe they made a mistake, whatever the case is. My point is, if you're somebody that's been sending small amounts of Bitcoin into your wallet, and then you go to send a large amount or even a small amount, a moderate amount, it may be exorbitantly expensive. And in fact, it may cost more than you have in Bitcoin or relative to the dollars. This is a big concern. I'm going to keep this video short today. That's my big concern. I'm going to tell you what to do. The thing to do is when fees dip down, you do what's called consolidating your unspent transaction outputs, which essentially is there's some wallets like Electrum, for example, or Samurai that actually allow you to pick and choose these unspent transaction outputs and then send them to yourself when the fees are low. So it's important to start consolidating these unspent transaction outputs, especially if we have a bunch of smaller unspent transaction outputs that have come into our wallet. For example, if we were dollar cost averaging and then we regularly sent it. Quick tip, if you are dollar cost averaging, like myself, I'm purchasing $8 worth of Bitcoin a day. Don't withdraw it when it's like $50 or $100. Wait for it to stack up, maybe 0.01 Bitcoin. Then you send it to your wallet, maybe more. But now we're getting into these problems where now we're trusting our money with an exchange for a longer period of time. So I got to tell you what, I do think it's rather unfortunate that Bitcoin failed to scale as far as increasing the block size. A lot of people are all excited about Lightning Network. We could talk about that more later. But this is what I want to share. As the block size decreases, the block reward decreases, I should say. As the block reward decreases with the halving coming up, the incentives are going to change for miners. As more and more demand for Bitcoin comes into the market, as larger financial institutions start to hold Bitcoin, the potential exists for these large financial institutions to really see the value in Bitcoin, use it as a reserve currency. There's already layer 2 Bitcoin solutions that are catering to banks to help them with settlement. All of this has happened, as I said, with a very small block size, with developers that refuse to increase the block size. As this is all taking place, it does set up a perfect storm, especially if Bitcoin becomes a reserve currency or is used by banks, to where me and you, the retail user that have been collecting Bitcoin, investing in Bitcoin, sending and receiving Bitcoin, we got all these small unspent transaction outputs. Those unspent transaction outputs could be unspendable, right? Now, there's a lot of variation, there's a lot of intricacies, there's a lot of specifics that would go into that, but you may go look at your wallet and see what type of unspent transaction outputs you have sitting in it. This may not be relevant to folks that bought a quarter of a Bitcoin or a tenth of a Bitcoin at a time, but if you were dollar cost averaging and sending yourself regularly, it should be a concern. And the very first masterclass we're going to do with the new Live Free Academy membership is going to be all about consolidating unspent transaction outputs. I'm going to make it as simple as possible so anybody following along can get the support they need. And then the cool thing about the membership we're launching is there's going to be ongoing support. Not only am I going to teach something in the masterclass, but then I'm going to make myself available later on in the month after you've used the material, after you've tested it out, if you've tried it yourself. If you still have a problem, you'll be able to come to the office hours and I can help you out further. So the membership is coming up. The first component of the membership is going to be centered around cryptocurrency and the counter economy, trading amongst ourselves. Then later on, we're going to move into land development, I'll still be doing the crypto stuff, but my lovely wife is going to be teaching master classes about land, homesteading, building intentional community. Those are our 2 focuses here at Live Free Academy. But really excited to be launching this membership. I hope that you'll join us. If you're not on the email newsletter, livefree.academy/email, livefree.academy/email. We'll be telling you more about the details and how the membership's going to work and all the really cool features. It's been putting a lot into this. I'm really excited to launch it to the world. And then again, mark your calendars. If this is something that you're interested in, maybe you've been with me for a while, maybe you've done some of my courses for a while. Our membership hasn't been open. This is a new membership program. The 23rd, 24th, and 25th, we're going to open the opportunity to join. So check us out. Join our email newsletter, livefree.academy/email. Follow us, sign up for the the Live Free Academy wait list at livefreemembership.com, livefreemembership.com. Okay, again, guys, the halving's coming up in just a day or so. The number of new Bitcoin created is going to get cut in half. Watch the rest of the videos in the series. On day 1, I break down just basically what is Bitcoin, what's the blockchain, what do miners do, what's this mining reward all about, what's the incentive, what's proof of work. On day 2, I really break down Bitcoin is digital gold. I thought it was electronic cash. What's the implication for the shift? Yesterday, we talked about the potential price action. What is the price implication for Bitcoin when it comes to the halving? And today, we've laid out the potential for Bitcoin to be a reserve currency. Whether that happens or not, I can see where things are going. It's going to get more challenging to spend small amounts of Bitcoin on the blockchain. We need to prepare ourselves for that. It's already here right now, but it's only going to get worse. And I have the tactics that you can use in order to do just that. We'll be breaking it down as part of our membership. So stick around with us, guys. I'm looking to build long-term relationships with you, the viewer. We got a lot of work, not just to protect ourselves, our own prosperity, and our family, but we're on a mission to create a free world, and I'm grateful that you are a part of that mission. This is John Bush signing out. Peace and freedom, guys. Stay free out there. Bye.